Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 436 on July 17th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Quantum Computing Inc., Replimune Group Inc., the Nokia ADR, and Supermicro Computer Inc., and we discuss 4 new trades on EOS Energy Enterprises, Fermi Inc., Lucid Group, and the iShares Bitcoin Trust Beneficial Interest, ETF. Now, it's always great to hear from listeners. If you have any questions about today's show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets inched lower this week. The Dow Jones Industrial Average lost 490 points, ending the week at 52,146 points. That's a loss of 0.93%. The S&P 500 index lost 117 points, ending the week at 7,457 points. That's 1.55% lower. And now it's time for the topic of the week. The topic of the week is creating my own AI trading coach. Now, I'm giving you guys a sneak preview of some content that I'll probably make a video for soon. I use artificial intelligence quite a bit, and if you can give it a good prompt, you can get some pretty amazing results even on the first try. Now, when it comes to trading, I've shared my full strategy with ChatGPT. I then asked for tips to make it better, and it gave some great information. What has been fun is taking a screenshot of the price chart for the end of the day and then sharing my actual trades for the day. It then creates a nice and sometimes rather truthful analysis of how I executed relative to the trading plan I presented. It gives me tips on improving, and I have been shocked at how spot on it has been with the analysis. Now, this is just a little heads up that this is even possible, right? I'll probably make a video, like I said, sharing what I did and how I did it sometime in the coming future. Who knows? By then, I may have stumbled on even better results for creating my own trading coach using artificial intelligence, because the prompting is getting better, the models are getting better, and it's just unbelievable what's possible. So I just wanted to throw that out as a little bonus for those of you who listen to me. Feel free to try that at home on your own. All right. So let's get into the review of last week's trades. We're going to start off with our covered call on Quantum Computing Inc. Symbol Q as in Quebec, U as in uniform, B as in Bravo, T as in Tango. At the time, the stock was trading for $8.66 per share. I looked at buying that stock and selling the August 9 call at 94 cents. That could give us a return of 14.78% in 6 weeks. Well, shares of Quantum Computing lost 86 cents, ending the week at $7.80 per share. The call option we sold lost 33 cents, leaving us with a net loss of 53 cents if we were to close the trade out immediately. Now, the stock price is still slightly above the break-even point. We also have 5 weeks until expiration on this one. So for those 2 reasons alone, I will not look to make an adjustment on this trade right now. If we were to continue to drop lower, I will definitely look to roll that call strike lower and try to recoup some of the losses when I do so by taking in more option premiums. We have some time right now, and that's going to give me just enough cushion to be able to see if this stock is going to pull higher or not. Next up, we have the cash secured put on Replimune Group Inc. Symbol R as in Romeo, E as in Echo, P as in Papa, L as in Lima. At the time, the stock was trading for $10.99 per share. I looked at selling the August 10 put at $2.55. That could create a return of 25.5% in 5 weeks. Now, shares, I guess it was 6 weeks at that point, Shares of Replimune lost 76 cents, ending the week at $10.23 per share. The out-of-the-money put option that we sold is still out of the money. Now, the put has increased in value by 3 cents, but we're not really concerned with that at the moment. We just want to make sure that this put expires out of the money. Of course, if it doesn't, we'll get assigned the stock, and we would then look to sell a call option against the shares immediately, making it a covered call. Either way, this trade still has lots of profit angles left to it. We are well above the break-even point as well, which means that this one is actually still profitable. So no adjustments are needed just yet. Next, we have our credit spread on Nokia ADR, symbol N as in November, O as in Oscar, K as in Kilo. At the time, the stock was trading for $12.42 per share. I looked at selling the August 12-11 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Well, shares of Nokia fell $2.31, ending the week at $10.11 per share. The out-of-the-money put spread that we sold is now in the money. The stock price is above the break-even price, so we are justified in making an adjustment. Now, my first move is to sell a higher strike call spread to turn this into an iron condor. But right now, the higher strike call spreads are selling for about 6 cents. So it's not even enough to make it worth making this adjustment just yet. Now, as I mentioned earlier, we still have quite a bit of time before expiration. So I'm willing to track this stock another week or so before making an adjustment. And since we traded a spread, the maximum possible loss was known up front. So I will want to make sure that any adjustment that I make either locks in profit or reduces the amount of money that I could lose on this spread. Otherwise, I probably should consider making a different adjustment or not adjusting it at all. So we'll see how this one goes, but right now I'm just going to keep an eye on it. And then our final trade from last week was the debit spread on Supermicro Computer Inc., symbol S as in Sierra, M as in Mike, C as in Charlie, I as in India. At the time, the stock was trading for $28.33 per share. I looked at buying the August 27-28 call spread for 65 cents. That could give me a maximum gain of 35 cents, or that's a 53.85% return in 6 weeks. Well, shares of Supermicro Computer fell $4.16, ending the week at $24.17 per share. The in-the-money call spread that we bought is now out of the money by several dollars. If we expect this pattern to continue over the next 5 weeks, we can certainly sell the 27.29 call spread at 34 cents. This will help offset some of our loss and then change the spread from a debit spread to a credit spread. I would pair that with selling a put spread on the lower end to create an iron condor. For instance, you can sell the 23.22 put spread at 37 cents. You will have sold the iron condor at 71 cents, fully allowing you to recover the money you paid to enter the spread. You would also have more money at risk, so make sure you understand what you're doing if you make this sort of adjustment. I'm also fine, once again, waiting a couple of weeks just to see how the stock performs before making an adjustment. Just make sure you do the math before changing the risk on the trade so that you fully understand what's happening. All right? So that's it for the review of last week's trades. Today, Friday, July 17th, was the expiration for all monthly options in July. All new trades on today's show will use the August 21st expiration date for monthly options in August. The half strikes will be priced on Monday, so you might be able to find better priced opportunities in the market on Monday with less risk than what I'm about to share on the show. So with that caveat, let's dive in. We're going to start off with our covered call. I'm looking at EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. The stock ended the week at $4.13 per share. I'm looking at buying stock and selling the August 4.5 call at 55 cents. That could give us a 22.28% return in 5 weeks. Now you enter this trade by buying stock for $4.13 and selling the August 4.5 call at 55 cents. This trade makes the most money if stock prices finish above $4.50 per share. The break-even price is $3.58 per share. In real terms, The stock purchase will require $413 and you'll collect $55 for selling the option. Next, we have our cash secured put on Fermi Inc., symbol F as in Foxtrot, R as in Romeo, M as in Mike, I as in India. The stock ended the week at $6.03 per share. I'm looking at selling the August 6 put at 90 cents. That could give us a 15% return. Now you enter this trade by selling the August 6 put at 90 cents. This trade makes the most money if stock prices finish above $6 per share. The break-even price on this trade is $5.10 per share. In real terms, you'll collect $90 for selling the put option, and you'll have $600 locked up just in case you need to purchase the stock. Next, we have a credit spread on Lucid Group Inc., symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. The stock ended the week at $7.34 per share. I'm looking at selling the August 7-6 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Now you enter this trade by selling the August 7 put at $1.17 and concurrently buying the August 6 put for 84 cents. This is the credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $7 per share. The break-even price is $6.67 per share. In real terms, you'll receive $33 per spread that you sell and have $67 at risk. And our final trade on today's show is going to be a debit spread on the iShares Bitcoin Trust Beneficial Interest ETF, symbol I as in India, B as in Bravo, I as in India, T as in Tango. The stock ended the week at $36.33 per share. I'm looking at buying the August 35-36 call spread for 66 cents. That could give us a maximum gain of 34 cents, or that's a 51.52% return in 5 weeks. And you enter this trade by buying the August 35 call for $2.47 and concurrently selling the August 36 call at $1.81. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $36 per share. Break-even price on this trade is $35.66 per share. In real terms, you'll pay $66 to enter the spread, and your maximum gain is $34 per spread. So that's it for this week's show. Thank you guys so much for listening. I wanted to make sure I got it out early, definitely on time this weekend. So I was a bit late last weekend. Last weekend was crazy. That's a whole nother story, but and not necessarily crazy good. There's just a lot of stuff, but this week and this weekend is much better. I hope you're having a fantastic weekend, a lovely summer, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.